Hello, Woden's Day. And carrying on from yesterday, a thing in the United States of America, housing, the bigger the loan, the longer the foreclosure. When it comes to foreclosing, and apparently this is happening more and more now, lenders see some delinquent homeowners as more equal than others. Mortgage debt of more than $500,000 seems to get lenders to look the other way for an extra month compared to those who owe far less. Interesting. And apparently it's no great order from above. It's just the natural process that down in the banks they are slower to send out the delinquent papers on rich people. This second one is a chart which has got on it treasuries and corporate yields. And this is obviously the question, where should you put your money? Because so many people are rushing into treasuries. And as you can see from all our lives really, since 1954, you've got more money investing in treasuries. That's the black line. The interest coupon has been more if you go into treasuries than you would get on the yield, dividend yield from a corporate buying stocks. Because when you buy the shares, obviously you get for quite a lot of companies, you get a dividend as well. So the dividend has been a lot lower than owning treasuries, but treasuries have been coming down and down and down lately, and people are still piling into them because of the safety in them. But dividend yields on the corporate equities is now going up slowly, and it's a good chance that these will cross again like they did before 1954, when the yields were higher than you got from the coupon of the treasury. Maybe. Bloomberg on China. China, August home prices rise in all cities, challenging government curbs. The central government is trying to calm all this down because they know that it's getting out of control. But the local, the regions, the states, let's call them, have got a bit of a Ponzi scheme going. That the states have borrowed huge quantities of money, and the only way that they can pay that money back is by keeping the housing or the real estate Ponzi scheme turning over and keeping housing prices going up, and they get income in from that real estate turnover, and then they can pay their debts. If it all falls down, then the states won't be able to pay their debts. So they're defying central government. Tricky in China. The article is China's August new home prices rose in all 70 cities monitored for the first time this year, undercutting government efforts to cool the market through higher down payment and mortgage rates. Bloomberg again, China's stocks fall to 14-month low on tightening concerns, IPOs, initial public offerings. China's stocks fell to a 14-month low after Premier Wen Jiabao said the government will take measures to control inflation, and investors speculated pending initial public offerings will sap demand for existing equities. In other words, loads of new companies are going to go onto the market, and that might take money from the companies that are already on the market. But basically they're fearing that the central government will get on top of things and will exert their power to contain inflation with all the manipulations that they're doing. Third, Bloomberg, China slowdown looms as inflation limits stimulus. XPBOC, People's Bank of China official says. China's economy is highly likely to slow next year, and efforts to spur growth will be constrained by inflation and government debt burdens. Those will be the local debt burdens, presumably the state government debt burdens, says Wu Yaoling, a former deputy central bank governor. So he's saying that things might slow down next year, and the government will not have the manoeuvrability to put stimulus in, and they won't want to because that would only kick inflation off again. Fourth, Bloomberg, China. China may add $728 billion of stimulus, says Deutsche Bank. Deutsche Bank said that China may roll out economic stimulus as much as $728 billion, including subsidies on consumer goods in the event of a global slump next year. Somebody's right, somebody's wrong. Move to the a bit of a linkage for everybody. EU to urge US, Japan to act on public deficits at the G20. There's going to be another G20 meeting. That would be hilarious to be on a fly over the wall of that one. The European Union will call on China this week, not for more money this time, to boost domestic demand. EU's telling China to boost domestic demand, and then is calling on the United States and Japan to tackle their public deficits as part of their global effort to rebalance growth. It was shown in a EU document. So that should be funny. EU telling China to sell more washing machines to their people when they really should be telling Germany to sell more or buy more olive oil, Greek olive oil, and telling the United States and Japan to get their public deficits under control. Pot, kettle, black. So this is Bobby Zoellick, who's the boss at the World Bank, who's being interviewed here under a heading of the interview, what does Europe need to do to address its crisis? Old Bobby Zoellick says, up to this point, the European Union has been taking emergency liquidity steps. The ECB is very, very, very constrained in what it can do. It's really outstepped its boundaries by a long, long way. When it was set up, it's only been in existence, 12 years or something. It had very, very constrained parameters about what it could do. And it's well past that now. It's basically broken every single parameter that it was set up with. So calling on the ECB to do everything is a bit wrong until you change in law what the ECB is allowed to do. Anyway, knowing the European Union and its governance, says Zoellick, these haven't been easy. So I'm not seeking to be critical of what has been accomplished. But what struck me in the summer, particularly as the markets started to move on Italian and Spanish bonds, was that the muddling through approach, which is standard for governments, has run its course. My assessment is that Europe's leaders have to make some decisions about the interrelated fundamentals. If in doubt, put a couple of words together that sound good. Sovereign debt, the banks, and competitiveness. Sort that out, will you? Even with liquidity support that buys time, what the markets started to perceive in the summer was that absent decisions on the fundamentals, there will be further incidents and political events that will prompt challenges by the markets. Bit Weasley worded, isn't it, really? In other words, he's just saying, gosh, I wish they'd sort it out. So I'm going to finish with an article by Will Hutton, who's apparently some important, people listen to him in the United Kingdom anyway, writing an article in The Observer. And there's some good stuff at the start of it, but I'm going to get to where I think he runs the vehicle into quicksand. He's jolly to start with, bouncing across the tundra in his four-wheel drive, and everything's fine, but then... So, let's go with it. Reasonably long. 80 years ago, faced with today's economic events, nobody would have been in any doubt. We would obviously be living through a crisis in capitalism. In other words, the old people, they would have recognised it. Instead, there is a collective unwillingness to call a spade a spade. This is variously a crisis of the European Union, a crisis of the euro, a debt crisis, or a crisis of political will. It is all those things, but they are subplots of a much bigger story, the way capitalism has been conceived and practiced for the last 30 years has hit the buffers. Unless and until that is recognised, Western economies will be locked in stagnation which could even transmute into a major economic disaster. Good start, eh? We go on. Simply put, the world has trillions upon trillions of excessive private debt financed by too many different currencies whose risk is allegedly mitigated by even more trillions of financial bets which in aggregate do not minimise the systemic risk one iota. There's a bit of a clang, clang, clang of alarm there with, simply put, the world has trillions upon trillions of excessive private debt financed by too many different currencies. I think he's got an idea in his mind. This entire financial edifice, underwritten by tiny amounts of capital, has been created over 3 decades, backed by the theory that markets do not make mistakes, the efficient market hypothesis. Capitalism is best conceived and practiced, runs the theory, by hunter-gatherers, bankers and entrepreneurs owing no allegiance to the state or society. Dubious. This is nonsense. Business and the state co-generate wealth in a system of complex mutual dependence. I know a lot of people won't like the idea that even the state is party to the co-generation, but we do accept that by building infrastructure and policing things, it creates an atmosphere where the capitalist can operate efficiently. Markets are beset by mood swings and uncertainty, which, if not offset by government action, lead to violent oscillations. Capitalism without responsibility or proportionality degrades into racketeering and exploitation. I think that's fair enough. Given half a chance, free market capitalism will degenerate. I'll go that far. The prospect of limitless pay is an open invitation to bad or even criminal behaviour. Good capitalism cannot happen without referees to blow the whistle or robust frameworks in which markets can function. Neither is reliably created by capitalism itself, hence the role of a democratic government. Again, I'll say fair enough, because I'd look at, let's put it this way, capitalism like a bunch of teenagers, lots of energy, lots of will to do lots of things, but also a great propensity to run out of control. And parental guidance, the parent doesn't have to be telling them what to do all the time, but just have to be there to say, whoa, stop there, setting the boundaries. Yet, the world is trying to solve the legacy of the last 30 years, as if none of this was true, and instead that the practice and theories that created the mess are still valid. US Treasury Secretary Tim Geithner joining EU finance ministers in Poland as again they pondered how best to end the ongoing euro crisis was at least recognising today's interdependencies between countries when he urged his fellow ministers to stop bickering because the markets were terrified by the threat of a catastrophic event with all the risk that posed to the United States. So the adults are kind of getting together, the parents of the children are getting together and saying, we'll have to get together and sort this out. Okay, move on to the last paragraph. where I think he goes off the rails and into the quicksand. George Osborne was also right to declare that a strong euro was in Britain's interest. A strong euro is in Britain's interest, no need to go into that. But worrying about how a failed euro might impact on yourself is old speak. This is starting to get slippy. But worrying about how a failed euro might impact on yourself is old speak. This is kind of new speak. This is kind of don't think pessimistically. As long as you think optimistically and drive forward, things will be well. It ain't necessarily so. What the markets need to hear is that Western politicians, whether in the Eurozone or not, see the euro as part of the potential solution to capitalism's current crisis, not its cause, and that they are prepared to do all in their power to support the reforms necessary to make the euro survive and take other measures vital to make the world financial system function again. Geithner and Osborne must put some money where their mouths are. I'd analogize this by, we've got the market, which are the teenagers doing their thing. The parents are there and every now and then said, no, stop there, don't do that, but otherwise carry on. What we have here is the parents, the governments, the politicians have created something themselves, the euro. The teenagers said, I wouldn't do that if I were you, but they did. And now this man is saying that everybody, the teenagers, should stop playing and come and sort out the mess that the parents have made. But the teenagers don't do that sort of thing. They stand there and go, you made a mess, you made a mess. So what he's saying now is all the wealth, the co-wealth that is created by the joint efforts of the teenagers and the parents, the free capitalism markets and government, should be used to maintain the mess that the parents, the governments have made. Because otherwise, society, the whole parent-teenager relationship will all break down. And you can see in a way he's right, but it's not natural. It's very contrived, and teenagers will not be forced into that sort of action. And the parents do not have what it takes to sort it out on their own. So the parents should do the adult thing and admit they made a mistake. And when they've done that, there might be a chance of sorting things out. Because then, with honesty out there, even the teenagers might help. But I wouldn't guarantee that either. But first, honesty. It's the adult thing to do. See you tomorrow. Bye.